Hey, Becky, yeah, that's right. This year was one for the IPO record books. Companies and SPACs raising $318 billion, the largest figure ever, even after adjusting for inflation. While investors were receptive to new listings, on average, their debuts popped 22%. Since then, the market has shunned them. The mean performance for companies that went public this year, not including SPACs, is negative 11%. Only 22% of new listings this year were profitable, so the market sold them off along with other high-growth, money-losing stocks amid a shift in Fed policy that could mean higher interest rates next year. A weighted basket of 2021 IPOs produced returns of negative 3.7% in a year where the NASDAQ is up 21%. So very dramatic performance that doesn't bode well for companies in the pipeline for 2022. Since it's harder to coax investors to put more capital into an asset class that's been a negative source of alpha this year. So capital markets experts I've spoken with say next year's deals will be all about a return to fundamentals. Tech and biotech will still play a big role as they have for decades, but you can expect to see more sponsor-backed industrials and financials come to market. Big deals, but usually a bit slower growing, and it's unlikely that we match this year's record issuance. Part of that has to do with SPACs, or special purpose acquisition companies. They're unlikely to help push next year's numbers into record territory. Sources say that the nearly 500 SPACs that are still searching for a merger target could dissuade additional vehicles from raising capital, and they're expecting regulation from the SEC that may clarify rules surrounding things like compensation, conflicts of interest, and liability. Lots of big question marks in the SPAC world, Becky.
Leslie, the thing that usually cools the IPO market or puts a chill on it more than anything would be if markets crash, right? If markets come down. We're still talking about markets either at or near record highs, and I would think that in itself would mean that for now the spigot is wide open.
Yeah, it's interesting because the new issues are usually priced based on how their comparables are performing in the public market. So if you have a new company, say, company like Reddit, for example, that's in the pipeline for 2022, they may look to see how another social media company, say Facebook or Twitter, has been performing this year to see how they value it for next year. The higher the valuation, the more likely they are to go out and actually do that debut. So it really all depends on the comparables. But the fact that a lot of the IPOs of this year are underwater means that the investors that typically put money into these things may not want to value them as highly as their publicly traded comparables because they say, well, all of these untested new issues have not done well for me, so I am going to be very hesitant about putting more money to work in that area in 2022. So that could present a chill and could close the window in 2022, even if just kind of temporarily as these things work themselves out.